Have you been thinking about getting into Forex trading? Forex trading opens up a world of opportunity for those who know how to do it properly. You can experience financial freedom and reap tremendous rewards for your trading skills. Unfortunately, many programs make big promises and throw students into the trading market without the proper knowledge and expertise to succeed. Fortunately, there is a solution. Great White FX Academy is the best place to start your Forex trading journey with the tools, resources, and education necessary to help you thrive in the market. Great White FX is an online Forex training platform that provides technical training that will help you succeed. It is of the utmost importance to have a proper qualitative education to participate in Forex trading, and that is exactly what Great White FX focuses on. You can reach us on Facebook at Great White FX and Forex Educational Academy, on Instagram at Great White FX, on Twitter at Great White FX, or call us at 234-803-930-61888.
Good evening, all. Good evening. If you can hear me clearly and see my screen, please type in yes into the chat box. Everybody is disabled. If you can hear me clearly and see my screen, please type yes into the chat box. Okay, so good evening, all. You all are welcome to today's market review with Great White FX for the 10th of August to the 14th of August 2020. So, without wasting so much of your time, let's get down to business. As always, we're going to start with what the technical calendars have for us this week. So, looking at the fundamental calendar for this week, we have medium impact news on GBP on Tuesday, also on US dollar, but the major impact news starts from Wednesday. So, and if you notice, there's going to be rate news on the New Zealand dollar by 3 a.m. West African time. Then by 4 a.m. there's going to be a press conference. Then 7 a.m. we're going to have prelim gross domestic product on British pound. Then 1:30 p.m. we're going to have CPI news. So Wednesday is going to be fully loaded. Thursday, we also have AUD news. Then also Friday. So this week we have some major news. So given the fact that we have high impact news on New Zealand and the Aussie this week, there is going to be a greater impact. As you might see more movement on the NZD and AUD pairs and NZD and AUD cross. So you need to take note of that. So without wasting so much of your time, let's get down to business. So as always, we always start with the dollar index. So looking at the dollar index, yes, let's start from the weekly view. Looking at the dollar index from the weekly view, we could see that last week closed with a long lower wick. And if you observe carefully, if you notice, let me show something here. If you observe, you notice that this was a prior week's low. This low, price spiked below it and closed back above it. So that on its own is a bullish signal. That on its own is a bullish signal. It indicates a trap move at this level. So how do we trade that going into the new week? And if you observe on the daily time frame, we have what is looking like a W formation. If you switch to your line charts, it's a lower leg. But if you switch to your candles, it's like equal lows. So as you can see, this might be confirming that we might have a temporary low at 92.56 on the dollar index. So how are you going to trade that? You go down to your 4-hour time frame. When you go down to your 4-hour time frame, let me put in my levels. It's very simple. This is the weekly 50. That's the range of last week's 50% of last week's range, then price may come in here and bounce. You get? But as long as this low here at 92.52 holds throughout next week, you might see dollar moving higher. So if you would ask me, I would say you apply your fee on this range. That's from this range low to this range high, and wait for price to drop. Once price drops and gives you a bullish evidence, then you can take a long position. And if you're taking a long position, what will your first target be? The first target is going to be at this level. That is coming at 93.99. Then the next target is coming in at this level. So for now, we have a possibility of a low, a temporary low on the dollar index. So the next pair we're going to look at is gold. So looking at gold, gold for now is still clearly bullish, but if you look at it on the daily, there are signs of a gradual corrective position. As you can see, throughout all this move, there has only been a kind of candle like this at this point. And if you notice, although this candle looked like a bearish engulfing candle, it had a long lower wick. Now we have the same setup here. My only concern with this setup is price closed back within the low of this bullish candle. That's just my only concern. If it had closed well below it, then we can say we have a weakness on the gold pair. That means we can say we have a temporary top at 20.7525. But be it as it may, what you just need to do is, given the bearish engulfing position on the daily, put in your levels. And if you notice, we don't have what might look like a failed a reversal, a very, very convincing reversal pattern. Those of you who I have taught, you know what I'm looking at. If we don't have a very, very convincing bearish pattern here, unlike in the dollar index. If you look at the dollar index, what I showed on the dollar index. So there is a possibility that price may still move high. There is a possibility that price may still move high. As you can see, the close on Friday. So, but I'm of the opinion that we might start seeing weakness. So what you just need to do is you pick your fib like this, and then you wait for price to correct. Doesn't mean you can't take a long position. Yes, you can, but if you're taking a long position, you need to know where your possible points of exit are. So this is the daily 50 range. It comes in at 20.45. The 62 comes in at 20.52, and then somewhere much higher. So that is it for gold. So there is a possibility that we might be looking at a temporary top here. So what price we need to do, something like this, comes back. If it can't go above this high, it needs to take out this low. That would be a more convincing pattern. Or you see something like this, comes back like this, then this pattern, a higher leg above the previous high, will be a more convincing reversal pattern to me. So that's what we have. We might have a temporary low. So we need to see a failed higher swing and a move lower. So that's it for gold. The next pair we're going to be looking at is the USDCHF. Excuse me, I didn't have all this lined up. So we're going to look at the USDCHF. So looking at the USDCHF, this is a monthly view. Let me remove all the markup so that I can easily show you guys. This is last month's candle. That's for July. And if you observe, this is the low. And like I tell most of you, you need to watch out for your previous month's high, your previous month's low, previous week's high, previous week's low, prior day's high, and prior day's low. Those are very, very vital. And if you observe, it's easy to see here. Price spiked below last month's low and moved back into the range. So if you look at that on the weekly, is what it's looking like on the weekly. It's very, very evident what the move looks like on the daily. If you look at this on the daily, you could see the same pattern here. Can you see it? If you sometimes why it's good you zoom out of your chart. Can you guys see what I'm looking at? Can you see what is here? Can somebody type in what is visible on this chart at this point? You can, nobody, you all, can somebody just type in so that we can quickly continue? Yes, a lower leg W formation. It's a lower leg. So we switch to your line chart. It's equal on the line chart, but on the candles, it's a lower leg. So that means that there is a potential that we might see a higher move on the USDCHF. So how do you play that? You drop down to your 4-hour time frame. There is this is a low, this is a high. So this is a range on its own. So if I put in my levels, what you just do is, there is a possibility it can take off. You get, there is a possibility it might just come and take off next week. But you pick your low of that range to the high it made the prior week. So you wait for price to drop. And if price drops in and gives you bullish evidence, if it starts to move up, your first target is going to be the previous week's high. And if you look to the left, there's structure here. So that will be your first target, then maybe any other higher levels on the way up. So that's it for the USDCHF. So the next pair we're going to be looking at is the Euro USD. So looking at the Euro USD, let me remove all this. Looking at the Euro USD, we have still the same pattern. Last month's high, price spiked above it and closed back inside the range, as you can see. But the deal here is that price is yet to close below last month's low, last month's open price for the month. That is 0. That's, let me see, open that 1.1233. So I'm not sure I'm right. I'm sure 1.1233. So price is still above it. So how are you going to trade this? And if you look at price on the weekly, two spikes to the upside. Two spikes to the upside. But two spikes to the upside. Then if you drop down to your daily, what do you see on your daily? And somebody type in what you see on your daily before I continue. Somebody type in what you see on your daily before I continue. I need to type in what you see on this daily time frame before I continue. Anybody? Well, it looks like a higher leg information. If we switch to your line chart, it's very clear. It's a higher leg. So this is a more convincing reversal pattern for me. But the deal, it shows you now that there's a possibility they might go lower. So this neckline here at 1764 is your level to watch for. Once you get a 4-hour close below this level, then you might see heavy weakness on the Euro USD. So how are you going to play that? Let's put in our levels. When you put in our levels, I've already put in a feed. There is a possibility price may correct before moving lower. So remember the level I talked about, the level, and if you notice on this chart, there is a neckline here. You get, so there's a possibility price may run up to test this place before moving lower. And as you can see, there's structure here. There's a large structure here. So price may try to run up here before moving lower. So you just need to be aware of that. So there is a possibility that we have a temporary top on the Euro USD at 1970. So you just wait for an up move. If it gives you bearish evidence to the downside, you take a short position. So the next one we're going to be looking at is the GBPUSD. So looking at the GBPUSD on the daily, the same pattern, the same setup. If you look at it on the monthly, spiked above the previous month's high and dropped. Spiked above the previous month's high and dropped. Then the weekly, not much of a move on the weekly, as you can see. This is just last week's candle. Very, very small in small activity. So if you go down to the daily, we have a bearish engulfing on the daily. So there is a potential that we might be seeing, and if you notice, price spiked above the previous high, couldn't hold it, then continued to the downside. So we might see a little bit of let me explain something on this pair. I'm a little bit skeptical on this pair. Why? I'm of the intention that price might try 1.3202. That's just my view. That's just my view. It might try 1.3202 or even 1.3510. It might not do it this week, but that is what is in the pipeline. So, as you can see, this might be a consolidation to move higher. So, how are you going to trade this intra-week? Very simple. Let me put in my levels. Put in your levels. You have this range high, you have this range low. So, if price runs up, as you can see, there's a failure at this level. That's the prior month's high at 1.3170. As you can see, that's what gives this low. So, should price rally and give you bearish evidence at any of these fib levels, then you can take a short position towards this level here. But on the other hand, as you can see, this is a wide higher M formation, as you can see, and this is the neckline here. If we switch back, should price come down to this weekly low and fail to go below it, then you have a bullish evidence to move higher. So that's just what you need to pay attention to. That's what you need to pay attention to on this pair. Should it move higher and give you bearish evidence, you take a short position down here. But should price within the week start off this way and close back in here with something like this, it's going to move higher. So that's it for the GBPUSD. So the GBPUSD, you just need to wait and see what happens within the week. It's far from its weekly low. You get, so you just need to wait for it either at the previous week's low or wait for it to rally up a bit. So the next way we're going to look at the next pair is the EURGBP, and the same thing. So this EURGBP is not very clear. It's not looking very clear. As you can see, this is like a bearish engulfing candle, but price didn't drop lower, so price went higher. So if you look at this, I'm more of the opinion that this pair is in a bit of a range. I'm of the opinion it is in a bit of a range. This is the larger range. The larger range is between this high, that's at 91.76 to 89.38. That's the larger range. Then there's a smaller range between 91.48 and 89.82. And if you observe, there is a range candle here. There's an anchor candle here. This bearish candle. This bearish candle is an anchor candle. So I'm of the opinion you need to wait for price either at the top or at the bottom. It's indecisive. And you know the EURGBP has an impact on the GBP best. So as long as this pair is indecisive, it might also affect the GBP best. So you just need to be aware of that. But given this long lower week and this small bodied movement on Friday, there is a potential they might try to move higher. So this is that range candle here. It's 90.63 and the range low is here. That's 89.80. So this is just what you need to wait for. Should price run up to this, should price rally to this high and fail and close back, you take a short position. And if you observe, price is closer to the top than to the bottom. So there is a possibility they might try for this higher area here. So that's it. The next one we're going to look at is the GBPCHF. So looking at the GBPCHF, it's almost the same thing. Let's look at it from the monthly. Look at it first from the monthly. We have what looks like a bullish engulfing candle on the monthly. You see, this is the entire activity of last week. This candle closed above it. And if you notice, price went above this high and pulled back down. On the weekly, we have a bullish engulfing. So how are you going to treat this? So looking at this pair now, this pair, I'm of the opinion this pair might still go up. I'm of the opinion because of what they have here. If you notice, there is a bear trap here. And no matter how price tried to go, it failed to move lower. So, looking at this pair now, it might give you short positions, short options, you get. It might give you short options. But on this pair, as long as price, if you notice now, the EURGBP is closer to his week, to that high range. The GBPCHF is closer to his previous week's low. So on this pair, you need to wait for this. If price comes down to this low and closes back inside it with something like this, it's going to move higher. It's going to move higher. But should it close like something like this, then it might move lower. That's just it on this pair for now. They are not very, very clear. You get, but I'm of the opinion that this pair has the potential to still move higher. Because if you look at it on the daily, there's a range on the daily. Let me show you the range. So let me remove this. This is the range low, 1.1632. This is the range high. Or an inner range that is between 1.1753 and this high. So what do I mean? You pick your field, pick this low, and take it to this high. So that's just what you just do on this pair. So that range low, the range low is 1.1754. The range high is 1.2035. So you just wait. As you see, the 50% has been given support levels here. If you look at it, the 50% has been given support levels. So if price comes in here and bounces, so you just need to be aware of that, because even if you go to the 4-hour now, you'll notice that the weekly low is slightly below that level. So if price spikes it and moves back up, then you have your long position. So what you just need to do is just put your alert at such levels. So the next level we're going to be looking at is AUDUSD. So looking at the AUDUSD, see, the same thing has failed as its prior month's high. So failed as its prior month's high. Looking at the weekly, 1, 2, 3 weeks to the upside on the weekly chart. On the daily, remember we have high impact news on the AUD USD this week. So it's 9 o'clock, that's my hourly chime. So looking at the AUD USD, we have a bearish engulfing. And the thing with this bearish engulfing is that they took out 2 candles, 1, 2. And if you switch to your line chart, you have a very higher leg M formation. So looking at this pair, what will confirm this reversal is a move below this first neckline at 71.23 and this next one at 70.97. What do I mean? A daily close below them. A daily close below them will send price down to this level first. And this level is coming in at 70.10. Then the next level is going to be at 69.23. So how do you treat this on your 4-hour time frame? It's very simple. Already on your 4-hour time frame, you can see there's an M formation here. Price has closed below this first one, as you can see. As it's very evident. If you switch to your line chart, it's very, very evident. It has broken it. So what you need to do is wait for a pullback. So if I put in my levels, this is what you have. I already have my fib noted. So you just need to wait for price to pull back into any of these levels. If it gives you a bearish evidence, then you can take the move down to the downside. But you just need to be wary. There is structure here. So price may just try to dip into this level before moving back up. But this is your area to look for short positions if it plays out. Still bullish, still slightly bullish. If you look at it, it's still slightly bullish, but given the formations we're having here, we might be looking at a temporary top. So the next pair we're going to be looking at is the New Zealand Aussie dollar, New Zealand US dollar. So I didn't work on the Euro AUD, so I won't be looking at that pair for now. So let's look at the monthly. Well, he didn't get to his monthly high. He's already below the monthly open. So which means we might be looking at weakness on this pair. So if you look at it on the daily, you already have the swing, which shows that there's a temporary top at 67.31. But there is structure here on the daily. You need to be aware of that. Price has already come into it and reacted. So how are you going to trade this pair? Looking at it now on the daily time frame, we have a bearish engulfing. And how many candles did this candle take out? 1, 2, 3. Took out 3 candles. So how are you going to trade this on your intraday perspective? If you look at this, this is the high. It tried to make a higher high or failed. Where did it fail? Switch to your line chart at this level. You see a higher leg M formation. Price failed at the neckline. As you can see, if I switch back to my candles and zoom in a bit, let me zoom in a bit. You can see that neckline comes in at 0.6990. The high on this candle is 0.6990. And if you notice, there is a higher leg formation here also. Do you see it? This neckline has been broken, but it has not been retested. So that is the area you need to wait for price this coming week. That's just the area you need to wait for price this coming week. So if I put in my levels, I already have my fib drawn out. So you just need to wait for price from the 50%. The 50% is at 69.39 to as high as 66.69 level. That's where you just need to wait for price. As you can see, there's structure here. So this might give price to bounce to the upside. So the next pair we're going to look at is the USDJPY. So looking at the USDJPY, we seem to have given this long lower wick close here, and given the formation on the daily time frame, this previous week's low, we have structure here. We might be looking at a potential medium-term temporary low at 104.18 on the USD yen. That's the dollar yen. So how are you going to play this pair? It's very simple. Drop down to a 4-hour time frame. Okay, I don't have my levels marked. I don't have my fib. You just pick your fib from the low to the high. If price drops into any of this level and gives you bullish evidence, you take a long position. If you take a long position, what will your first setup, your first take profit be? You can use the fibs. You could use the fib level, or your first target to be this high, then this other high. As this high comes in around 107.20, the next level on the 4-hour comes in at 107.53. So for now, we have a temporary low on this pair. It's still bearish, but there's a temporary low here, which forms that we might see a little bit of correction to the upside on the dollar yen. The next pair we're going to be looking at is the euro yen. Looking at the euro yen, I'm still slightly bullish on this pair. This high price close, that's 125. What was this high? 124.43. 124.43. So although price spiked the high for July and closed back in, it's still slightly bullish. We have what looks like a bearish engulfing here. But if you drop down to the intraday time frame, you can see it's still very, very bullish. So if you ask me, this is the game plan. As long as you don't get the daily close below 124.43, this pair can still move to the upside. That's just it. Doesn't mean you can't have bearish scenarios. Yes, you can have bearish scenarios, But you should be well aware that some of the bearish scenarios might be used to activate long positions. So what do? You pick this low to this high. The best place you might just need to wait for is 50%. Just need to wait for the 50% because this is a 4-hour range. That means it might break below this 124.43, pick up 124.21 and move up to the upside. So that's just what you need to be aware of on this pair. So if you ask me, I'm of the opinion that it still has some potential to move to the upside. So the last pair and the final pair we're going to be looking at is the British pound yen, GBPJPY. So looking at this pair, it has a slightly bearish bias. It's still bullish, but he's below the monthly open. So that in its own context is slightly bearish. But so how I do look at this? Looking at this on the daily, you see that we have a range. So we're looking at the range position. And if you notice, everything is within the body of this candle. That's the 31st July candle. Everything is within the range. They've tried moving above the high, then they dropped back. So you have 1, 2, 3, 4, 5. 5 candles. So this makes this a master candle. So now the deal is to watch for a break to the upside. But even though you're going to have a break to the upside, you need to watch out for this high here at 139.73. So for this pair, for now, for it to move higher, you need to see something like this. Drop below here, then you move higher. Or a drop to activate this area here. To activate this area, then you move higher. So that's just the scenario we have on this. So that settles it for today. Does anybody have any pair you guys will want me to look at? Any pair you want me to look at before I call it a night? Any pair? I don't do German 30. I've never looked at it. I've never looked at it. If you notice, these are the pairs I look at. I've never looked at German 30. But I can do US 30. From my view, US 30 is still bullish. If you look at my review for last week or thereabout, I said it. This weekly low, and I'll repeat it again. This weekly low comes in here. Those of you who know how to read the levels, it comes in at this value. Price broke it when closed above it. That on its own is a reluctancy to move lower. Then price came in. So looking at this weekly candle, if you ask me, it's still very, very bullish. Very, very bullish. So what will you do? And this might be its target. This high here at 27.63.9.8. This might be its target. From this low to this high, only on the weekly candle. Then you wait for pullback and they move to the upside. I've already done gold. I believe I've done gold. Haven't I done gold? I've done gold. Hello? I think I've done gold, yes? Yes, I've done gold. So you have to wait for the recording. So looking at this pair, you just need to wait for a pullback. You just need to wait for a pullback and a move higher. So somebody says USD card. Let me look at USD card. So looking at USD card, I remember some weeks back. I remember vividly on this candle. Somebody said it was a buy. I remember telling the person that a USD card buy will be better from if 33.10 gets hit. And what the price do? Let's look at this level. Ooh. Came very close to this level, 31. Let's say this is a psychological level, 32.03. So let me just briefly look at this now. Looking at this pair, we have structure here. This is a monthly time frame. We have structure here. Price has already activated it. So that means there's a possibility it's going to move higher. This is a major anchor candle or master candle. 1, 2, 3, 4. 5 makes it very, very valid. This is a monthly chart. Be aware of that. 1 month, 2 months, 3 months, 4 months within a range of March. So you get now this kind of candles, their lows are normally very, very vital. Their lows are very, very vital. So I'll call this monthly range low. I don't have it. So let me just use range low. Range low. So that range low comes in at 1.3315. Now you get why I said 3310. A move below 3310 will be better. So now look at this. The first time price came down to that level was in June, and it spiked very high. You see, it did almost. Let me see. Let's let me use to measure this thing. Can't quite. It's something I used to measure this. I can't see it again. See. Can't find it. Okay, this is it. And it did almost 260 people. Now, given that there's going to have been liquidity built below here. So now let's look at this. Where's that stuff again? Let's move 82 pips below that low, as you can see. So the USD card, you might be seeing higher moves on it. And if you understand also, the dollar index is also gearing to move higher. So this pair has the possibility to move higher. So how are you going to trade this pair? As you can already see, you can see the move already. So if you ask me on this pair, it has the potential to do this. Then move higher. So what do? You just come. You come to this pair. Come and let me. You know, I don't trade this card, this USD card. I don't trade it. It's more controlled by oil than any other thing. So I normally stay away from it for my own peace of mind. Prior week high, prior week low. For my own peace of mind, I try to stay away from it. So what you just need to do is from like this. If you have a paid, if I think the free version on TradingView has room for alert. So what you just need to, there's a 4-hour range. Yes, there's a 4-hour range. It's like this. So you wait for it to pull back. You might try to test this range low, 3315, because this is the break below. And if you notice, there's a W formation here. Switch to your line chart, higher leg. So there is a potential that they might try to come back to test this low, 3315. Once they test it and it holds as support, then the USD card is moving to the high side. So we're looking at a temporary bottom at 3233. So I thank you all for taking your time to attend. These are my social media handles, social media card as I call it. The recording for this review will be posted on the YouTube channel. And I also have, this is my Instagram handle, this is my Telegram handle, and this is my line and my WhatsApp line, so you can chat me up. I have a Telegram group. It's accessible from the Instagram page, where sometimes when some of these pairs I have on notice are giving potentials, I give out what I call a century report. So based on that century report, you can plan your trade based around what I have said for the week. So if you like the video, subscribe to the YouTube channel, follow our Facebook pages and our Instagram pages. We would really appreciate that. And motivate us to do more of these videos. So I thank you all for taking your time to attend. I wish you all a beautiful night's rest and a blessed week ahead, and may the peeps be with you this week. So good night and thank you all for coming.